Hi, this is Dave, and welcome to the weekly market recap, closing out the week for Friday, May the 10th, 2013. To all the mothers out there, happy Mother's Day this weekend. I hope you have a fantastic weekend, and I hope that the men in your life spoil you. So let's just jump right into this video here. Starting off with the Dow on the daily chart as usual. So the big news in the market this week is surprise, surprise, we hit new highs in the stock indices. And if you take a look at the Dow futures, we hit just over 15,000 in the Dow, and we closed out the week around 15,000. Well, we actually went as high as 15,000, just over 15,100. So 15,102. We closed out the week around 15,068. So we're at all-time new highs in the Dow. And at this point in time, I'm not swing long. I'm not swing long the Dow, and I really don't care that I'm missing this ride, because the market is, I'm not going to say it's toppy, but we just, there's no resistance. There's no real resistance overhead. So we don't really know exactly where it might go, although we can, look at a couple of, take a couple of cues and see where it might go. So at this point in time, let's just flip charts and take a look at the same instrument, but on the weekly chart, using the Darvis squeeze, I'm having a hard time talking today. I apologize. Using the Darvis squeeze methodology, and let me just find the proper workspace here. That's not it. That's not it. Okay, here we go. So let's just jump over to the Darvis squeeze on the weekly chart, and we did have some signals in the background. And okay, so this is a weekly chart of the Darvis squeeze. If you look back December, January, I can get the exact date here, but right around let's see, December, right around January, the middle of December, the middle of January, we fired along on the weekly Darvis squeeze at around 13,477. So if we project the distance or the range or the width of the box, however you want to describe it, on a one-to-one basis from the breakout point, that brings us up to 14,650. 14,650. That was this signal that fired, back here. That's why I've been, for the most part, net bullish on this market. Now, if you look at this from that perspective, we've already met and exceeded that target. So, to be honest with you, I have no idea where this market could go. From a seasonality standpoint, April is the strongest, typically the strongest month of the year, and we're into May now, and we still keep going higher. So another way we can look at this market is from a Fibonacci perspective. If you look at this as a cut pattern on the weekly chart, and we project it off of the highs and the lows of the Darvis box, and then we're looking for, breakout extensions using the 1262 and the 1272. We've also exceeded those targets. So those targets come up right where support is at the rising 21 exponential moving average on the weekly chart. So this chart's a little bit messy, and I apologize for that. But, using this methodology, that's sort of, a couple of ways that I, derive my own targets going forward. So those targets are met. I really don't know where the market's going to go from here. We're in potential blue sky territory because we don't really have any resistance overhead in the form of prior price resistance, because, as mentioned, we are at new all-time highs. So let me just switch back to our more traditional charts, and let's look at the sister indices here. And take a look at the S&P futures. The S&P futures, same sort of scenario. We're just pushing higher. We closed the week at 16,2950, 1629.50. Exact same story. Let's take a look at the Nasdaq. So with the Nasdaq was a little bit more interesting to me because we had this, this really elongated cup pattern here. And we were looking at in last week's video, the week before, the breakout of this pattern with the potential 1272 extension at 2962. That's been met. And we have another potential upside target of 3093. Now I'm not participating in this move. I'm just looking at this from an analysis perspective. That's sort of what I would expect off of this, sort of cup with handle pattern. Okay, so let's just take a look at the transports from a Dow theory perspective. And the transports broke out to new all-time highs as well. And you've sort of got this mini cup pattern handle, cup with, I apologize. This mini cup without handle pattern sort of happening there. And if I look at the breakout extension of this move, that would bring us to, potentially, we want the 1272 and the 1618 extension off the high. We tested the 1272 extension, we pulled back, and we have a 1618 around 65.46 as a potential target in the near term in the Dow transport. So, that looks interesting. The transports are confirming from a Dow theory perspective. Let's take a look at the some of the other markets. Let's start off with gold. So we've been talking about gold from the last couple of weeks. I did take a trade in gold from the breakout of 1403 up to 1479 was where I ascertained the resistance to be, and you can see we've held that resistance for almost 2 weeks now. And this is sort of what I was talking about in last week's video, where I'm interested in gold. I'm doing this, finding resistance, and then putting in a lower high somewhere. So I'm looking for a lower high, and then what I'd like to see is it develop some sort of support, a trend line, and then break through this sort of level right here. If we can get back above 1480, let's call it 1480, then I'd be looking for a push potentially to 1525 to 1550, and then ultimately somewhere around 1600, which is a nice round number in the gold future. So I'm starting to like this setup, and I'm starting to look at it, looking to see if we can put in a pivot point, a lower high, and then break back through 1480. So if we can get back above 1480 on some strength, back above the 21 exponential moving average, I'd be I'd be interested in that move. So let's take a look then at gold's stepsister, the silver, and I call it the stepsister because it's not, it's not really, it doesn't look as strong as gold to me. I could be wrong there, but it's sort of doing the same thing, but it's really going more into a sideways, consolidation pattern. And if we flip over to, what, to see what this might look like on a Darvis squeeze perspective, which I like to look at in sideways markets. Let's just take a look at first of all, let me refresh this list so we have current data. And then if we go down into the silver, so we do have, like if you notice here in the silver, we have on the silver futures on the continuous contract on the daily chart, we're in a squeeze, which means we have low volatility, and we have a potential breakout scenario. So if we expand the daily chart out there, this is the daily chart. I apologize, it looks a little bit messy. There's a lot of stuff on there. But here's the sort of box range that we've developed, for the silver. So a breakout above 2484 would confirm a Darvis squeeze to the long side. A breakout above 2484 would get me sort of interested with a retest of some of these prior swing points, which come in around 2650-ish. Okay, so if we can break above 2484 in the silver, while this is setting up this sideways consolidation, breakout with the Darvis squeeze setup, then I'd be looking for potential targets as high as 2650-ish. So I hope that makes sense. Let me just clear the screen off here and jump back to, we don't want that screen, we want, okay, the traditional charts. So that was a silver 2650 would actually bring us right back into that trend line as well. So I like that level for the reason that we have multiple confluence levels. We have a potential setup in the Darvas squeeze with targets that would bring us here. We have a prior swing low with a breakdown point. Here's a prior test of a resistance level, and then we have a downtrend line, a minor downtrend line that all lines up with that level. We could probably, take it a step further and see if that, if we have a confluence point with a fib level, taking it off that high. I think this is the relevant high because that's where it sort of kicked off the downtrend again to the low, and that brings us right in smack in the middle of this zone right around 28.26, which is a 50% to 61.8. But that's a little bit lower than, or a little bit higher rather than this zone. So I do think it is potentially achievable. And I do think that, if we start to see some strength, I'd be looking at 2650 as a potential first target. And I'd be looking at, between 28.26 and 29.76 as a second target, right where that, right where this zone is setting up. So I hope that makes sense. Let's take a look at the natural gas. Let's see what the natural gas is doing. So the natural gas sort of put in a lower high off this level, broke down. It's above. It is above some of these retracement levels, but let me redraw these fibs just to be clear. I'm looking at this low off of support, which you can see here, the support level to this high, and we have a 50% retracement coming in around 384. We have a 61 coming in around 370. So ultimately, that's where I'm looking for support in this market. But having said that, we're looking more bearish than bullish, but we do have, a minor uptrend in the background. So I wouldn't be surprised to see, us hold either the levels that we're at now or even hold 370 and then push back up to the high side. Having said that, though, we have to be looking at this as a two-sided market, in my opinion, for the simple fact that we could resume this, this trend here in the background to the high side, but we could also, we've broken this trend line and we could be kicking off, a move back down to retest the lows. So my line in the sand is $3.70. And I hope that makes sense. We have to really look at this from a two-sided perspective. In order to get back on the bullish side, we need to hold support and close decisively above, this level here around 409 and above the 21 period exponential moving average. So, this market is a little bit two-sided in my opinion, and you'd be really looking to see clearly where your decisions points would be in that market. So, having said that, it's not all that interesting to me at this point in time. It failed this sort of breakout with a push to the high side, although this could be a deep handle and we could, push back up above 427. So a pushback above 409, definitely a pushback above 427 would get me interested back on the long side. So let's take a look at the crude oil. The crude oil has been having some some really choppy, whippy action here. And what I'm still looking, if you've been following my video for the last few weeks, I'm still looking for this sort of busted pattern scenario back to the high side above this 61.8 and above this trend line. A break above, let's call it 97-ish, with a move to potentially 100 to 101 dollars a barrel. You can see that we're starting to establish a trend line to the high side. This is the second test, and you can see we found we had some really strong accumulation on Friday off of these lows right at the 21 exponential moving average and right where it met with that with this trend line. Now the trend line is not what I consider a sustainable 45-degree angle trend line. It's a little bit accelerated, more around 60 degrees or so, just by judging it by eye. But a pushback above and closing above, these levels up and around 90, let's call it 97-ish, would really put me on the bullish side of oil with a busted pattern sort of scenario. So I hope that makes sense. If you've been following my videos over the last few weeks, it should. Same sort of scenario, same sort of situation. Decision point is really a break above, these levels in my opinion. And let's take a look at some of the key currencies. We looked at natural gas, crude oil, gold, silver. Let's take a look at the 30-year bond first. Now, the 30-year bond, I was looking for some seasonal strength in the 30-year bond, and we sort of failed that. We failed the 20-period moving average. I don't have the 50-period moving average on here, but we failed the 50-period moving average as well, analyzing it from some other charts. We're really buried in the stochastics here. But what I'm looking at, I was expecting some seasonal strength to come into the bonds. What I'm really looking at here is the line in the sand is really, the 618 of this low to this high. So I'm looking at 143 and 30 seconds to potentially hold and then push back off to the high side. If that does not come to fruition, then I think we need to be looking at the possibility of bonds going lower and interest rates going higher. So we should probably be keeping a look at the the interest rates to see if they're spiking higher in the relationship between bonds and rates. So at this point in time, it's not looking great to the long side, but it's still holding in and around this support zone. If we close decisively below 143 and 30 seconds, then I think all bets would be off. So there's the 30-year. I'm not going to get into the 10-year and the 2-year and the 5-year. So let's look at the dollar index. So the dollar index has been really, really whippy here. We were looking at, last week we were below the 82.35 to 82.50 major support zone, and it looked like we were, going to find some real weakness and sell off. But, we always have to look in the background and look at what's going on in the background. Well, you have essentially, an uptrend in the background. From the last recent low to high. And if you look at it from that perspective, that's why I like to use Fibonacci analysis, because all we did was come back and retest the 50% retracement, which is a normal pullback in a normal market environment. If you study some of even like Wyckoff's work, for example, which you can get on some write-ups on stock charts, some stockcharts.com, some basic summary of Wyckoff's work. What you'll notice is he's always looking at these 50% retracements. I think in today's market you also have to look at, like I look at the 61.8% retracement as the real line in the sand. But if you look at it from this perspective, we held this, what I'll call a zone, from this low to the high in the background. And even though the dollar index was looking bearish and it failed the 82.35 to 82.50 mark, and that's the line in the sand where I was a little bit more bearish, ultimately we're holding this support zone, and now this week we're right back up above 82.50 and retesting these highs, and now we'll be looking to see if the dollar index is going to break through this resistance zone. So at this point in time, you have to be really cautious and really nimble in these markets, and you always have to be cognizant of, what happened in the background. We had this minor uptrend in the background, this intermediate uptrend, and we really just pulled back to a support zone, and now we're back up above, the major support from a horizontal support and resistance sort of perspective. So I hope that makes sense. And let's take a look at the euro then. As you would expect, the euro is probably doing the opposite. This is interesting. So the euro is looking sort of negative, but it's actually holding right in around $1.30 support. So this kind of mixed message makes me cautious and makes me indecisive. So at this point in time, we had this downtrend in the background, but in the background of that, we had sort of an uptrend. So, you can look at it from, from this low to this high. We're holding in and around that 50 to 61.8 of that major move in the background. And then if you look at this high to this low, the intermediate, we're finding resistance from this high to this low. That's where these fibs come in play. And we're finding resistance there. So we're sort of stuck between support and resistance. When I start to see this, I start to think of, we're sort of in a dead zone. We're sort of in a dead zone. We're sort of in a consolidatory sort of area. We're sort of in a, an indecision area. We really need guidance out of that area. So in order to get bullish on the euro at this point in time, I mean, $1.30 is sort of my horizontal resistance support level that I've been talking about for many weeks now in these videos. That's sort of my ultimate line in the sand between long and short on the euro. But, in order to get anything really productive going from a bullish standpoint on the euro, we really need to get above $1.3363, this 618. And in order to get anything bearish going on, we need to get below $1.27. So that's a really, really wide range of like 500 or so, 600 pips. So at this point in time, I would probably not be looking to swing trade this, but maybe looking to take trades off of lower time frame charts if I were really active in the euro, which I'm not that active in the euro. I will take trades on it, but the trades, the setups have to be very compelling to me. At this point in time, I don't see anything very compelling. So this to me looks like we're setting up sort of a Darvas squeeze. So let's just jump over to the Darvas squeeze charts and the Darvas squeeze methodology and see if we are in fact setting anything up in the currencies. So where are my currencies here? I've got, and I apologize, I could be pausing these videos in between looking for these instruments, and but I'm just going to kind of go for it here and see if I can find. The euro is Aussie dollar, Canadian. Why don't I see the euro here? Here it is. It's right in front of me. Okay, so the euro is setting up. Let me just refresh just to make sure it's relevant. Current. So the euro is setting up a Darvas squeeze. It's actually fired a Darvas short. Now let's analyze this in a little more detail. And I apologize, there's a lot of writing on this chart. So let me just let me turn my sort of indicator off that I've developed off of this. So the way this works is we're in a squeeze, which is a low volatility period. We broke the low or the support of this Darvas box in place. So let me just turn this off for a second. Let me status that off. Oops. There we go. So this is this indicator here. Okay, so now what you can see is that you've got a Darvas box forming in this range here, and we broke the low just by a little bit. But there's ultimately the real support to this trade, or the real intermediate support is right around this level. So, we're sort of accumulating a little bit off the bottom there. So a break of, let's say, this level here would be the real signal. Let me just mark that level. And that would sort of get me on the, if we broke this level decisively around $1.2930, then I'd be looking for a retest of, some of these lower levels. So at this point in time, we're really in a sideways consolidation, and we really need some guidance out of what I would consider this sort of range, right here. Somewhere out of $1.2930, $32.54. We're just really in between support and resistance. So that's sort of how I look at that. Let me just turn this back on. Format analysis techniques, average true range I want on, and I want this indicator on. There. Okay. So I hope that helps. I don't think there's any other charts that I really want to look at this point in time. We will start looking going forward at some seasonality plays from a sort of a top-down view of the major markets this week. I think those are really the things that are in play. Having said that, I don't think there's really a lot of opportunities out there, and I'm sort of keeping my powder dry and looking to assess, where we might hit some real inflection points and where we might, find some opportunities going forward. So I don't really see a lot that's really that interesting this week. And there you have it. So happy Mother's Day tomorrow. Happy Mother's Day weekend. And I'll look forward to seeing everybody at the next video update or at an upcoming meeting. So be well, good trading, and take care for now.